here at Market Focus. So here we want to, maybe do analysis or look at some opportunities. That's basically what we want to do. And today for you guys, I have the Euro USD, which I want to look at. And I think there's a pretty good opportunity here. So that's why I brought it for you. Okay, so with that being said, let's get also the sound completely down here. Good. Okay, guys, so basically let's jump into it. So we want to look at this chart right here, and what can we see here? Let's also hope that the camera stays on. Sometimes this GoPro just turns off by itself, unfortunately. I don't know why. So okay, now let's look at Euro USD, and we want to switch quickly to the bigger overview right here. So that is a better. So what can we see? Let's go on the weekly. First of all, this is where I normally start the analysis. So basically we can see this pair is trending up. We can see this in the price action on the higher time frame, guys. I always look at the price action, like I zoom in a lot, right? And I just look at the each kind of candle, because here I'm taking advantage of basically, is it this candle, is there trust up or is there trust down? And I'm taking advantage on how the candles are forming basically, right? So now, as you guys can see, there is still a trend or thrust up. What does thrust mean? This just means some kind of candle engulfed, and there is no counter engulfing. As long as there's no counter engulfing, it's basically thrusting in one direction. And so far, as you guys can see here, it's doing that. And you can see this because basically we have always these kind of engulfings on the weekly, from red to green, like here, for example, like here with a bigger body. And so far there is no counter engulfing. So that means the thrust up is still intact, and I'm assuming it will stay like this until this target is reached here, which is like a major high point, right? So I'm assuming this will come in the long term. However, if the weekly would engulf down at some point, which this didn't do yet, then of course the analysis would change at that point, right? But so far it's not engulfed down, so I'm still thinking to preferring the upside. So let's look at the camera, still working. Okay, good. So basically you can see last week there was a correction which was kind of necessary, because it was overextended a long time. It went up, and then at some point it needs to do a correction. But as you can see, the correction didn't engulf to the downside, so that means for me we're still up, still trending up until this bigger target, most likely. And key level is here, of course, the weekly low from 2 weeks ago, because this one shows me it was not engulfed down, so it's still trusting up, and that is the key level, right? And basically we did kind of a pullback there this week, and now it's stabilizing around that level. So that for me is all very interesting. And now let's delete these arrows. I want to keep the charts as clean as possible. And now let's look at the daily. So here it's very interesting, because you guys can see there is potentially an engulfing now on daily, right? Which shows me again in the price action on the higher time frames. I zoom in a lot, I look at the different candles. So it shows me, okay, here potentially it's resuming the trend up after this corrective lag which we had here, right? So there was a corrective lag right here, and overall we can see in the structure that we are trending up, right? So I'm assuming the correction might be finished here, depending on how the daily will close here. So far the daily is not finished. We can see it's still 25 minutes to go, guys, and but it's looking good currently, right? We need to wait, of course, 20 more minutes here until the daily close. But if it should engulf like that, then I would say a high probability that this will go up a minimum to this small point right here, high point right here, and then maybe in the long run even the more significant one right here. So looking pretty good. Then we can also measure the targets. If this is gonna be quickly need to look at the camera. Okay, I don't want it to shut down, right? So now, if this engulfing holds true until the end of the day, then we can measure out the daily candle projected up, and that gives us the targets. So there is one target area right here, and another target area right here, right? So that is all looking pretty well. And now the next thing we want to do, what I normally do in my analysis, I compare the bigger time frames, right, with the smaller ones. And for the smaller one, so I normally use 4 hour and 2 hours. For the smaller one, maybe sometimes the 1 hour as well. And here I'm looking at Bollinger Bands, second and third standard deviation. So much important. And so basically, like I said, on the right side we have the bigger time frame, the bigger one, like daily and weekly right here. So weekly is for me up, daily now for me back up with this engulfing potentially. And then in the smaller time frame we have the Bollinger Bands, and we're looking more in the structure. In the smaller time frame, we don't look at each candle. Of course, for the entry, yes, we want to make it precise, so then we look at the candle. But overall, here we want to look more at the structure, which is trending up, right? And we always see these kind of points where we go outside the second and third standard deviation of the Bollinger Bands, right here, right here, right here. And these are expensive prices, so we don't want to buy here. So first of all, we want to be buyers, right? Because we know weekly is probably going to go up more. The probability is just higher. So I want to be buying, so I don't take these shorts here that I drew up. I don't want to take them, I just leave them out. But what I want to show with that is that I don't buy here, right? I don't buy at these high points, because some people get FOMO. They're like, oh, it's shooting up, I should go in. And I say about that, no, because you can see it's expensive, right? So what do we want to do in the smaller time frames? We want to actually, let's see that the camera stays on. We want to actually buy at these kind of cheap areas if we can. Right here, it didn't come to the Bollingers here, also not quite, but sometimes I go down on the 2 hours and I see the Bollinger Bands right there. Depends, right? And these are basically the areas. So here was a cheap price actually right here. So this one I like, and another one probably here. And today this one was very good. This one I took today long, which one is down here, right? Color change, and it came from the second and third standard deviation. And we know the weekly is down, the bigger time frames are down. So that's the bigger time frames are up, sorry. And so we want this price to come down on the smaller time frames. That's what I meant to say, right? So here it came down, 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 down. So here the prices became cheap. Yes, there was an opportunity right here. So this one was kind of tricky here. But these are pretty good right now, I think so. And so looking pretty good. And this is where we want to buy, basically, because the price is becoming cheap again, right? And we know it should go up more, so then we want to filter out these cheap prices with the Bollinger Bands, right? So normally I do this on the 4 hour, or sometimes even on the 2 hours. So here you kind of get the same entries basically. And yeah, this is how I'm checking it always. So now, guys, let's see. There's another thing to see. We kind of have also this breakout here of this kind of downtrend. You can see it here with this line. If you like to draw these kind of lines, I'm not so big on them, but basically you can clearly see here we kind of broke out today with this very nice momentum candle here. Looking at the 2 hour chart, very nice momentum candle coming from the pivot, squeezing out some stops, short squeezing out some stops basically. And now I think there's a nice opportunity to buy it. Unfortunately, guys, I see that my camera did shut off, so let me fix that quickly. Okay, guys, and we are back. I don't know why this keeps on happening, right? But that's just how it is. I had this problem actually for a longer time, and yeah, what can you do? Not sure how to fix it. So let's see. Yeah, we're seeing the charts. The camera is working. Looking good. So basically, this is where we left off before, right? So basically, to summarize or recap, actually, basically we do have this kind of engulfing here on the daily potentially to play out right now. Should with a high probability actually take us back to this high point right here, minimum, right? And we know weekly is also thrusting up, right? So we want to anyway be on the long side, right? And now here on the right side we have the 4 hour or is it? Oh no, it's 2 hour chart, and we did see this very nice momentum candle right here today, and looking good, broke out of the structure, and basically if you want to be very technical, it reversed, not removed, this kind of trend, right? So there was this corrective trend down, and with this high point it reversed it, right? So also in that kind of perspective, looking kind of good. And so then yeah, what do we want to do actually is, so looking here, let's clean this chart up actually a little bit, guys. I want to keep it clean here. So looking now in the 4-hour again, what can we see, right? So I use on the smaller time frames, like I said, the Bollinger Bands as like a filter. It's not like the Holy Grail or anything. Just using it as a filter to, you know, make my entries more precise, right? So we don't want to be short, right? So for example, these kind of very nice shorting opportunities, they were actually nice. I left them out always because stuff was just trending up, right? And on weekly it was just trending up, right? So yeah, there are some nice corrective actually patterns right here, but I don't trade them because the higher probability is to the upside, right? So here the Bollingers actually, they showed it pretty well, second, third standard deviation, but I never took these kind of entries. But why am I showing this to you guys? Because these are the areas where we don't want to necessarily buy because they're expensive, right? When we want to think about, okay, the big trend is moving up, right? The big trend is moving up daily, weekly, and so the bigger flow, you know, think of like a water, a big flow is moving up, right? So we want to go with the flow, right? The flow is up, so then we need to find the cheap prices, right, and not the expensive ones. So then in the smaller time frames, what I do, I look at Bollinger Bands to filter those out, and I look in structure as well, right? So in the smaller time frames, I don't look like that crazy close on the each kind of candle for the entry. Of course, yes, I want to have a precise entry, but overall I look more in structure here, right? So we can see this kind of structure moving up right here in this zigzag manner, right? And we want to always focus on the last kind of low points that we can see and the high points, right? And yeah, normally they happen around the Bollingers, so that shows me, okay, here's expensive, right? And why am I showing this? Because it shows that currently, yes, we are also expensive, right? So, and this kind of means that I don't want to, I mean, I'm long already because I went in here, to be honest, because I picked the cheap prices, right? I always wait until the second or third standard deviation in the Bollingers, like here, there were some good opportunities, right? One of them was actually a missed one, this one. I didn't take this one because daily was too red, but actually here you can see good ones, and I bought in here and here, right? And I think so here as well. So I averaged in this position, and now I'm just waiting it to ride up, right? So also I go always in kind of pieces in the position because I know it probably wants to come down more, needs to build structure, etc. You never know exactly where it's gonna turn, and that's basically what I do with averaging in, right? So and but now let's say you would not be in this position, what would you do? Basically here is expensive, right? When we know this because we're in the second and third standard deviation, in the 4 hour, in the 2 hour, let's see, the 1 hour, yeah, 1 hour kind of too. So what would be better? Maybe wait for tomorrow, so the engulfing should happen, and then tomorrow hopefully some kind of pullback, and then take it again, right? And then you can of course time it. I don't think we will come back to the second, third standard deviation on the 4 hour actually at this point. You don't know, of course, anything can happen, but for me it's a bit unrealistic. So what would I do then? I would go to the smaller time frames, maybe like the 1 hour. The Bollinger Band zone is right here. It's probably gonna creep up in the night, maybe come to this point, and then tomorrow, if there's some kind of correction going on here, and then meeting the second or third standard deviation Bollinger Bands, I would probably buy it up there if there's also some reversal price action in the 1 hour. So this is how I normally do it. Now I'm already in, of course, because I took this price right here, I think so. I took it here and here. Here I looked for the price action in the 4 hour, which was 2 times nice. Also it came from the second third standard deviation. This one right here was actually not so nice in the price action of 4 hours, so it could have actually been avoided to go long here. But I remember I went into 1 hour or 2 hour and looked there, and there I found engulfing there, so I went in here as well. Then it went against me, but that's okay, I can average in, right? So I leave the trade some room and just average this price. So currently, yeah, like I said, it's expensive, but once it probably does like a little bit of correction tomorrow, then it should get cheap again, and then probably go with the flow. Of course, we never know what will happen. Anything can happen here. It could also just completely break to the downside again. That can be, you know, nobody knows what actually happens in the markets, it's just random. But I think the probabilities are better now on the long side because of daily and weekly. That's why I'm thinking that. Of course, if the weekly would engulf to the downside for some reason this week or next week, then I change my mind. So I'm also always flexible, but I orientate from the bigger time frame, then translate that into the smaller time frame. That is basically what's going on, right? Then let me show you one last thing with Fibonacci's. Maybe, are we still recording? Yeah, everything looks good. So here we have this kind of high point right here. So this point in structure right here. So if this would break to the upside eventually, then we can measure this kind of area and project it up, right? Just the wrong tool. We want this one right here. So let's do that. You know, we're taking this kind of distance and projecting it up, and then we arrive here in the first zone, which is here, 223. So that will be around 1.118. So that will be my first target, and the second one is actually then taking out this high point. Second one is somewhere up here. So this is how you can play with the Fibonacci's. I use them, but they're not the most important thing, but I use them for confluence. So also they're kind of a nice tool to find turnaround points. Let me show you guys what I mean. So basically here, for example, we had a first push up, you know, but I look at the weekly, right? It needs to thrust up, so this push is not randomly, it comes from the weekly, right? But then there's some correction, and then you can use Fibonacci's, right? And you see 61% right here where it turned around and it did the next kind of push, right? And again, you can see here is a 3-wave correction going on. And again, we can measure from the last low point, which is here, to the high point, and again we see 61, and also the standard deviation second and third, which was hit here on the 4-hour. And this doesn't, you know, coincidentally go up here. No, it just happens because on weekly and daily it's trending up in the candle thrust, right? This is why actually it's turning around here. But I can see from confluence, I like these 3-wave corrective patterns. Then I know, okay, it might be finished with the correction. I like when it becomes cheaper on the 1561 and on the standard deviations, right? So then we can see another push up here, making a new high point again and again. We can do the same thing. We can see again 50 and 61% again, right? And now actually that we broke this corrective structure, the ABC, let me draw it again. You can see the ABC right here. What we want to do is project this up. So we measure out the corrective structure, then project it up, and you can see these kind of target areas right here, right? So they are not that coincidentally, right? You can see they stopped basically buying right here in the target area, and there was a little bit of correction. Then it went again to the target kind of. So this is how you can play it as well. Here's a corrective structure as well, so you can actually measure this one up as well, and again you get these kind of areas of interest, right? So then lastly, what can we see? So the last kind of significant low point was either here or maybe here. It's never gonna be perfect, guys, right? So but actually this made a new high point, so I think we should go off this one. So then let's measure it up again, and you can see again we are around the 50 and 61, which is pretty okay. It went a little bit further down, which is okay. It wanted to do a cheap price on the Bollinger area right here, as you can see. This is why I bought it here today, because it's in the Bollinger Bands, very cheap price. It's in this retracement area, in a deeper retracement. It likes also to go to 76 a lot of times actually. So yeah, this was a very nice play. For me, it was kind of clear. I want to average in here, and if it comes down to the 76, I would just average a little bit more. If we take the prior low point, this one here, we can again measure it, and we see again 50, 61 right here. So that also looks pretty nice, guys. Right, so here, yeah, I'm thinking high probability EUR USD should go up in the next couple of sessions, right? Now, of course, we never know what will happen. Let's go back on the weekly. it would make sense to go to the weekly high point again, but it doesn't have to, right? It can of course also become red again and go down and break the whole setup. That can never be ruled out. I just think that chances are higher though to the upside. Of course, it can also just chill around here for a couple of days, make a small green one, and then with the next week go up. That can also happen. It doesn't need to come up now immediately, right? It can take some time, of course, but like I said, as long as the thrust is up, I'm going with the bigger flow. And the moment the thrust is up, because there is no engulfing to the downside and we just see engulfings to the upside, yeah, right here, for example, this one engulfed, and so far it's just doing the same thing, and it didn't do a counter engulfing, so it's thrusting up, right? So that is basically it, guys. I think that's all I have to say right here. And yes, like I said, I always compare the bigger time frames like weekly and daily compared to the smaller ones like the 4 hour, 2 hour and 1 hour to find these cheap prices at the Bollinger Bands or Fibonacci's, or you know, just simple support and resistance stuff. Of course, you can also see here there was a area that needed to be filled with this wick right here, and this is where it turns around. This is also no coincidence. You can see this basically on the weekly as well. Once the week was up here, there was a big gap and they needed to close it, right, before it can go up again. So basically, guys, that's it. I don't want to keep this video too long. I hope this kind of analysis helped you, and this is basically my outlook right here. But like I said, do your own research. Doesn't mean this must be correct or anything, but this is basically how I'm seeing the market currently. So let's quickly jump back here to this overview, and the camera amazingly is still recording. I like that. And yeah, with that being said, guys, I wish you best of success with your trading. I catch you in the next video. I will try to make some updates if I have time. I want to do more of them, of course. Let's see if I have enough time, but I definitely want to show you this one because I'm thinking there's a very nice setup here in the EUR/USD where a lot of stuff is coming together, which shows me, okay, more upside to expect. All right, guys, with that being said, yeah, best of success with your trading. Catch you in the next one. Peace out. Bye bye.